Lesson 2, Accounting Equation. Okay, so here with this accounting equation, they've asked you to do number 1. And number 1 says the owner has increased his capital by depositing 100,000 Rand directly into the business's bank account. Now remember, the first thing you always need to do is identify the two accounts. So here we have capital, and it's going directly into the business's bank account. So the two accounts are bank and capital. Now let's think about capital. What is happening to capital? Capital is going to increase your owner's equity, right? Okay, so owner's equity increases on the credit side. So I am going to credit capital. What is happening to your bank account? The owner is putting money into the bank account. So your bank account, which is an asset, is going to increase. And assets increase on the debit side. So you are going to debit bank. Now bank is an asset and it was increasing. So it's going to be plus 100,000. And capital is an owner's equity and it increases your owner's equity. So it's going to be plus 100,000 under owner's equity and 0 under liability. 0 plus 100,000 equals 100,000. I have a debit and a credit. What is my source document going to be? Bank statement. Then at number 2, it says issued an invoice for goods sold on credit. Right, issued an invoice for goods sold on credit. What is the first thing you need to think of when you see sold or sales? 4 accounts are affected. Now you've sold something to a debtor for 1350. A debtor owes you 1350. Why? Because you made a sale. So 1350 because you made a sale. So first things first, the debtor is an asset and owes you more money. So you are going to debit debtor's control. Okay, debtor's control is an asset and he owes you more money. Why does he owe you more money? Because you sold something to him. Sales is an owner's equity. Income, and incomes increase your owner's equity on the credit side. Increase your owner's equity. 0 plus 1350 equals 1350. There's a debit and a credit. But now, did I make pure profit here? No, I did not. There was a markup of 50%. So let's work that out. It's 1350 divided by 150 times by 100 equals 900 Rand. So there was a 900 Rand expense to this whole scenario. There was a cost to my sale, and cost of sales is an owner's equity expense. Expenses decrease your owner's equity on the debit side. So I'm going to debit cost of sales, and it is an owner's equity, and I'm going to minus 900. What did I sell? I sold trading stock. My trading stock has decreased by this cost of sales value. Trading stock is an asset. I've sold it. It's left my building. So it's minus. So I have to credit trading stock. It is an asset. So I'm going to say minus under my assets. 0 minus 900 equals 900. This was a sale. A credit sale. When you make a credit sale, we write out an invoice. The original invoice will go to the debtor and we will keep the duplicate invoice. Okay, number 12. Issued a credit note for goods that were returned. Goods were returned. Okay, so from this very sale, goods were returned. Trading stock came back. I need to cancel the cost of sale. I need to cancel the sale. The debtor owes me less. It involves this transaction directly. Okay, so let's think of it step by step. What happened? The debtor bought from me and owed me a certain amount of money. Now he's returned some of it. So I need to say he owes me less. Debtor's an asset and it's decreasing. He owes me less. So I'm going to credit debtor's control. He owes me how much less? He owes me 420 Rand less. So it's minus 420. Why? Because he's returned a sale. We don't put it through sales. We call it debtors allowances. So we have this expense, debtors allowances. It's an expense to the sale. It decreases my sales, so I'm going to debit debtors allowances. Now it's an expense. Expenses decrease your owner's equity, so we're going to say minus 420. Now we have to work out the cost of this, so it is 420 divided by 150 times 100, so that is 280. Okay, so 280 is the returns. So now trading stock came back. Originally the stock went out with the sale. Now some of the stock has come back in. So my trading stock has increased. Okay, it came back. So I'm going to increase my trading stock. Okay, what else has happened? I have to cancel my cost of sales. I recorded cost of sales here, but I need to take it out of my cost of sales. So I'm now going to do the opposite, because I have to take it out of cost of sales. And it's now going to be a plus because I'm reversing it. My cost of sales is an expense. Normally the information's on this side, but I have to take it out, which means it lands up on the positive side of cost of sales. Remember when we originally made the sale, I put it on this side in cost of sales. Now I have to take it out of cost of sales, so it's going to land up on the plus side. Hence here it is a plus and a 0. Okay, so it always equals. Here it's going to be a duplicate credit note. And lastly, I want to just look at the last transaction on the 21st, not these two. So received 1350 from line in part payment of the account receipt issued. So here the debtor is paying us back. Firstly, let's think about what's happening to bank. We're receiving money from a debtor. So my bank account is going to increase, right? And the debtor is paying me back, so he owes me less. So I'm going to credit debtor's control. Now they're both assets. My bank account increased with 1350, and the debtor owes me 1350 less.